Fears of soaring inflation. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this Zero Hedge article, which is discussing 77% of Americans are worried about soaring inflation. And I would hazard a bet that a lot of the viewers of this channel are concerned about it one way or another. So, are you? Let us know. How are you dealing with it? Are you going into crypto? Are you going into gold or precious metals, or going into property? Because their money printing seems to be the new thing around the whole world. Australia's got infinite QE too now, pretty much. You know, they're going to intervene as much as is necessary to maintain the bond rates. Now, the problem is, the old definition of inflation is simply an increase in the supply of money. The new one, they try and massage it as an increase in prices. But depending on the way that they measure it, it seems quite odd. Here in Australia, they're not counting, CPI doesn't count the land and property because that's an investment. But that still has an impact on our quality of life, doesn't it? On everyone trying to save to get into a house. But there you go. So let's have a look at this. Americans are becoming more worried about inflation than ever following the Federal Reserve and the federal government's unprecedented response to the virus pandemic downturn by plowing trillions of dollars into the economy. As a result, prices of financial assets and items in the real economy have soared over the last year, which a new survey reveals 3/4 of consumers are concerned about inflation. I mean, I've noticed inflation in day-to-day. Well, let's just say I've noticed an increase in the cost of goods in day-to-day, because we're seeing the candle-on effect manifest in our economy. In the US, I'd suggest it's the stock market. Here in Australia, property. With the Federal Reserve turning a blind eye to rapid price increases, consumers are finding it unavoidable to avoid higher prices at the gas pump or supermarket. A civic science survey of more than 2,600 respondents found that 77% were somewhat concerned about inflation. So, how concerned are you right now about inflation in the US? 6% are not sure, 42% are very concerned, 35% are somewhat concerned, and 17% are not concerned at all. Much of the inflation concerns are based on younger respondents. About 52% of respondents aged 18 to 24 are very concerned about inflation. 50% of 20 to 34 are very concerned, and 48% of 35 to 54. Boomers aged 55 plus were only at 37%. Well, they've probably got a lot of passive income investments that are just going to simply adjust to inflation. They've got their assets. It's the younger people who are trying to build up their assets, trying to get into property, as an example, are probably more worried about inflation. Maybe they're working. So how concerned are you right now about inflation? We can see here, so very and somewhat, wow, a lot of people. And I mean, the difference between 18 to 24 and 55 plus, it's not that big. You know, not at all. There are more people in the younger group are not at all worried than those in the older group. Meanwhile, Cleveland Fed President Charles Evans said some increases in inflation would be welcome. Too low inflation is not good, he added. This is the problem with the whole Keynesian interventionist model. But for the millions of working poor Americans still collecting pandemic insurance checks, soaring prices have been much of a nuisance. Naturally, people who have had their hours or pay reduced as a result of the pandemic are the most sensitive to the idea of inflation and what it means for the general cost of living. If it's difficult to make ends meet now, imagine how difficult it could be once inflation sinks in, said Civic Science. Well, yeah, inflation is a tax that disproportionately affects the poor because it has a greater impact on their cost of living. That's the thing. And it's this insidious tax that robs all of us of our work. You can have all this savings, you can have worked hard, and it's brilliant. The government can just generate this money and rob you and tax you away your purchasing power. This is why I think political leaders will do everything they can to keep the current economic system going, because it gives them this amazing power to tax people without them realizing. So the impact of pandemic on job status compared with how concerned are you right now about inflation? Okay, so working as usual or remotely, 50% are very concerned. 36% are somewhat concerned and 13% are not concerned at all. Those who've had reduced hours and pay, 55% are very concerned and 27% are somewhat concerned. 18% are not at all. Not working and not getting paid, 28% are concerned, very concerned. 48% somewhat. And they're the least concerned. How? Okay. That seems odd. So, on a political basis, conservatives are overwhelmingly more concerned about inflation than any other political group. Well, that's not at all surprising, isn't it? 69% of conservatives are very concerned, 23% are somewhat concerned, 8% not at all. Moderate are 39% concerned, 44% somewhat, 17% not, and the liberals, the lefties, 21% are very concerned, 49% somewhat concerned, and 30% not concerned at all. This is what's surprising, is how many of the left are not concerned at all about inflation. Does that just, well, they can't be. How much of their political ideology, how many of them are MMTers? That's what we should all be concerned about. The general public appear to be catching up to the Fed's game as monetary and fiscal stimulus results in higher costs of living. By one gauge, as we noted earlier this month, inflation fears are the highest this century. The spread between US 5 and 10-year inflation break-evens is now the highest since the early 2000s. There you go. Consumer outlook for inflation over the long term climbed to an almost 6-year high. So Americans are panic searching inflation. Interest over time. Ooh, wow. Well, there you go, everyone. I mean, that here in Australia, Google search results, it's how we judge the how good the economy is going with regards to property. People are searching inflation. The Fed and government's big experiment with massive stimulus is possibly overheating the economy and may continue to push inflation higher. The Fed continues to beat its drum that it has inflation under control, and today's episode of surging prices isn't the 70s. The worst thing that could happen now is a repeat of the stagflation in the 1970s. So, there we go. Let's just have a look. We'll jump over here to Trading Economics, everyone, and let's have a look at some prices. Gold, which is a traditional inflation hedge is at 1732 US dollars. So it's been going steadily down. Are we going to hit that 1100 gold that some are worried about? Silver is at 2505. And I know John Adams has been doing a lot in just the fake silver market as well, particularly with the Perth Mint. So, I mean, there you go. These are two traditional assets that people buy in as a hedge from inflation, but isn't property also? And as well as the hot new item on the table is Bitcoin. It's 56,000, guys. We have a look down here in the top 10. Ethereum is back up to 1,700, and BNB, I remember when this was like $20 or something back in the day. It's actually a useful one to use on their exchange. So there we have it, everyone. 3 traditional hedges to inflation. What else are you buying? Are you concerned about inflation? What are you doing to prepare? Everyone, do you think we could see inflation like the 70s, or maybe hyperinflation like in Germany back in the day? As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, and watch out for inflation. I'll see you next time.